It is time now for our regular look at the week ahead in finance with our late news money man, Scott Phillips, Chief Investment Officer at Motley. Evening, Scott. Philip Lowe is set to give an important speech on Tuesday night. What can we expect from the RBA Governor as the year draws to a close? And what a year it's been for the RBA.
Peter, it certainly has, hasn't it? After a couple of years of doing almost exactly nothing, turning up the regular RBA meetings and saying, yep, nothing to do here, the last 6 or 7 months have just been extraordinary for everybody. And of course, while we're kind of smiling about it, it's been really painful for a lot of mortgage payers right across the country. This speech is going to be interesting because he's going to talk about price stability, something we haven't seen for the past 6 or 12 months. Hopefully something that's returning to the Australian economy pretty quickly. I don't think he'll give that much new information, but as we know, things are changing right around the world so frequently and so regularly. We might yet see a different sense of what the government is expecting from inflation as we go through the Christmas period. OK, the tech industry seems to be in free fall at the moment. Amazon, Twitter, Facebook's parent company Meta, all announcing significant job layoffs. At the same time, job vacancies have risen by 0.5% this month. What does it all mean for Australian companies? It's a challenging one, Pete. You raise a great point. Of course, we're seeing those headlines from across the ocean and saying, well, it's over there so far. We've seen some Australian companies over the past couple of weeks lay off some of their staff. I think Whisper laid off about 30% of its team here at home. The same issues, a slowdown in the economy, frankly, not as much venture capital money being thrown around as there was. So some of those businesses not making money right now are having to lay off staff. And of course, we saw Deliveroo close their doors here in Australia. We hope that's not going to have too big an impact on the unemployment number. It has been the one really bright spot over the last 9 months or so of really tough economic conditions. So fingers crossed that continues. The rise in job vacancies is probably the best sign that businesses, at least for now, are still hiring. OK, confidence is a word you really rely on when we talk about the economy and how we're looking and where we're going. Tuesday's a big day when we get some figures that will determine confidence in terms of the context of inflation and, of course, rising interest rates. Yeah, you've absolutely nailed it. Look, I mean, the key challenge here is, so the ANZ Royal Morgan figures, the ones we're talking about here, they had 6 straight weeks of decline until the week just gone when we saw the first increase in almost 2 months. And it really is now a question of what the economy and what the average consumer is thinking and how they're going to spend. Because as we know, what we choose to think about what the future looks like is what will determine whether or not we open or close those wallets and purses around the country. Fingers crossed for a reasonably positive read. Now, when I say reasonably positive, we're in deeply negative territory. 100, the index of 100 is neutral. We're at 80.6 at the moment, so deeply negative. Hopefully another recovery from that period. The RBA's done it shock and awe. I think we're coming to terms with it, and another increase would suggest that maybe we're on more of an even keel than might have been the case a couple of weeks ago. OK, and quickly before we go, what can we expect when the market opens tomorrow? You know, I like finishing with good news, Peter, and I get to finish with some today, which is always nice. Looking for a gain of about 1/3% on the ASX 200 when the market opens. Scott Phillips from Motley, always terrific to have you on the late news. Thank you, Scott. You're very kind. Thanks, Peter.